look back at 2020, and we did that last week, and as we look forward, we thought that we were going to remove a couple of the walls of worry, and one of them, apparently, the election uncertainty has been removed. We're watching this closely, of course. But with that, and of course, the idea that we're going to get a lot more stimulus has pushed the market forward.
Yeah, and I think that's what the market is focused on right now. You know, given the fact that the Democrats basically got a tie in the Senate with Kamala Harris being able to be the tie-breaking vote, there's going to be more fiscal stimulus than I think the market was expecting prior to the Georgia runoff.
And you're talking about trillions, $2 trillion would be the additional stimulus that might be coming. And obviously, both monetary and fiscal stimulus has pushed the values of equities forward. You know, people go, how come the economy was so bad in 2020 and the stock market did very well? And then you think about 2021, the stock market may not do as well, but the economy looks to be doing better, again, pushed forward by stimulus.
That's right. I mean, we're trading right now at a 22 forward PE multiple on the S&P 500. That's the price of the S&P 500 divided by the aggregate of S&P company earnings. So at 22 times, that's about 40% higher than the average over the long haul. But again, interest rates remain at very low levels, and directionally the economy is improving, and we still don't see major signs of inflation.
You know, you talked about, a blue wave early on. You said something to me earlier this week that, well, the blue won, but it wasn't a blue wave.
No, I think the fear before the election was that the Democrats would have 54 to 55 Senate seats. They'd gain seats in the House and, of course, win the presidency. That's what the pollsters said. As it turned out, they did win the presidency. They lost a few seats in the House, so they have a razor-thin majority there. And again, we have a 50-50 tie in the Senate. So, I would characterize this more as a blue ripple than a blue wave.
That's funny.
Ripple.
Right, and you talk about this happening before, and you went back and you showed me a nice piece that back when Bush was elected, he had, obviously, the presidency, won the House and had the Senate. It was all red back in 2005, forward up to President Obama's election. Of course, he was a Democrat, had both the House and the Senate, and even President Trump in 2017, as you move forward, obviously, were Republican, had the House and the Senate. So this is not news that there is all blue on one side. But what we could expect is a change in tax policy and a change in policy overall that could affect portfolios.
Oh, I think absolutely true. I mean, one of the key times to really reevaluate your portfolio positioning is when you have a change in leadership in Washington. And while initially markets tend to overreact to legislative proposals as opposed to actual policy that's implemented, it's certainly a time that investors really ought to think about, what their exposures are, which sectors of the economy are likely to be advantaged under a Biden administration and which may not. I think I can think off the top of my head of any number of things that are likely to happen. The question is whether that's already been discounted, at least at this moment.
And one of those things would be a mammoth infrastructure project that both sides are agreeing with. And so with that, you'd see companies like Caterpillar and Deere and the like do very well and have done very well. But obviously, alternative energy, healthcare, government aid, education, and gun makers are all going to be sectors to look at.
Yeah, we don't have a sector allocation towards guns, but I did notice that both Sturm Ruger and Smith & Wesson had very strong weeks this week.
Right, and so they expect some type of conversation about that, but in more globally, a change in tax policy and a change in a relationship with China could make a number of changes to portfolios. Again, when you build a portfolio, we talk about asset allocations, and I know that's a word we spend a lot of time talking about it. It really says, where are you going to allocate your capital based on the facts and circumstances? And Danny, this is what we do on a daily basis.